The dawn of a new trading era, a financial revolution beckons. The world of finance is stirring. Old structures face new challenges. Technology is the driving force. It brings powerful transformations. Think about how we trade, how we manage our assets. A significant shift is underway. This change impacts us all. It promises a different future, a future built on new rules. Imagine trading without a bank or a traditional stock exchange. This is the core idea. Decentralized trading platforms emerge. They offer a novel approach, a peer-to-peer financial system. Power shifts from centers, it moves to the individuals. This is more than just new software. It is a paradigm shift. Why is this happening now? People seek more control. They want transparency. They desire financial freedom. Current systems can be slow. They can be expensive. They can exclude many. Decentralized platforms aim to fix this. Unpacking decentralized exchanges, DEX, trading reimagined. What is a decentralized exchange? Think of it simply. It is a marketplace, but without a central operator. No single company owns it, no single entity controls it. Trades happen directly between users, peer-to-peer. This is a fundamental difference, a new way to exchange value. How do DEX actually work? They run on blockchain technology. Smart contracts are key. These are automated agreements, written in computer code. The code defines the rules. It executes trades automatically. When certain conditions are met, there is no need for intermediaries. Trust is placed in the code. Several components make DEXs function. Liquidity pools are important. Users can lend their crypto. They provide trading liquidity. In return, they earn fees, automated market makers or AMMs. These algorithms set prices based on supply and demand. Old guard versus new wave. Centralized exchanges meet their match. Traditional exchanges are familiar. Think of a stock market or a large crypto exchange. These are centralized platforms. A company runs the show. They act as a middleman. They hold your funds. They match buyers and sellers. This model has existed for decades. It is the established way. Decentralized exchanges are different. There is no central company, no single point of control. Software protocols govern them. Users keep their funds secure in their own personal wallets. They interact directly with smart contracts. Trust shifts from institutions. It shifts to transparent code. This is a core distinction. Listing new assets also differs. Centralized exchanges have gatekeepers. They decide which assets to list. This process can be lengthy. It can involve high fees. DEXs are often permissionless. Anyone can list a token by creating a new liquidity pool. Section 4, the allure of decentralization, unveiling key advantages. One major benefit is security. Specifically, it's all about control over your assets. On a decentralized exchange, you hold your keys, and your crypto stays in your wallet until a trade is executed. This setup significantly reduces counterparty risk, the risk of an exchange failing or even being hacked. Your funds aren't pooled centrally, which offers a greater peace of mind. Increased privacy is another big draw. Many decentralized exchanges require less personal info, or sometimes none at all. No extensive know your customer processes. This appeals to privacy advocates, allowing for more anonymous trading. Decentralized exchanges offer global accessibility. They're typically borderless, meaning anyone with an internet connection and a crypto wallet can use them. This opens up financial markets to people who were previously excluded by traditional financial systems. It's truly democratizing finance. Section 5, navigating the choppy waters, risks and hurdles in DEX. Smart contract vulnerabilities are real. The code that runs these decentralized exchanges can contain bugs or flaws, and malicious actors are constantly hunting for these. Exploiting them can drain funds from liquidity pools or users. Audits can help, but they're not foolproof. The technology is still young, and this code is law has its downsides when the code itself is flawed. User experience can be quite challenging. Decentralized exchanges are often less intuitive than their centralized counterparts. Understanding wallets, gas fees, and transaction signing is vital, which creates a steeper learning curve. It can deter new users, so making decentralized exchanges more user-friendly is a major ongoing effort. Simplicity is crucial for adoption. Liquidity can be an issue, especially for less popular tokens. Low liquidity means fewer traders, which can lead to price slippage. Section 6, the horizon of decentralized trading. What lies ahead for finance? Decentralized exchanges are improving rapidly, constantly, and innovatively. Developers are addressing challenges and Layer 2 scaling solutions are emerging. They promise faster, cheaper trades. User interfaces are getting better, more intuitive, and easier to use. New types of decentralized exchanges are appearing, offering more sophisticated features. The pace of change is truly incredible. Wider adoption is the next frontier. Will decentralized exchanges become mainstream? Can they integrate smoothly with traditional financial systems, or will they carve out their own space, perhaps replacing some old structures? The potential is enormous for transforming how we trade, how we invest, and how we interact with financial markets globally. The ultimate dream is powerful, a truly open financial system, one that is fair and accessible to everyone, everywhere. Empowering individuals, not institutions, reducing barriers and increasing freedom. Decentralized exchanges are a key part of this vision. They embody the principles of decentralization and transparency, a financial system for the people.